The man who called the 2008 crash years before anybody listened just labeled Michael Saylor the biggest fraud on Wall Street. And 6 days later, Saylor, the guy who spent 5 years swearing he'd never sell a single Bitcoin, quietly admitted that he might actually have to. Now, once you see what's actually powering the machine behind 818,000 Bitcoin, you're going to understand why this might be the most dangerous structure in modern finance. And what Saylor said on that earnings call might be the exact moment Peter Schiff has been waiting on since 2020. So first, here's the official version. Strategy, formerly known as MicroStrategy, holds 818,869 Bitcoin. That's worth roughly $66 billion. Wall Street consensus is strong buy on this. BNY Mellon, the oldest bank in the United States, just loaded up over 1 million shares. The Swiss National Bank owns it. Norway's Foreign Wealth Fund owns it. Saylor calls it a digital treasury company. Move along, simple enough, nothing to see here, right? But buried inside that treasury is a financial engine almost nobody is talking about, and it's called STRC. See, Strategy launched it in July 2025 at a 9% dividend. By April of 2026, that dividend had crept up to 11.5%. See, they raised $8.5 billion through this thing, one of the largest preferred stock issuances in US history. Heck, in April alone, $3.2 billion. And here's the part that the press release always skips. The Strategy now owes about $1.5 billion a year in preferred dividends and interest. That's $80 to $90 million a month going right out the door. And to pay it, they need one of three things to happen. Either sell more STRC, sell more MSTR equity, or eventually sell Bitcoin. That's not a treasury. That's actually a treadmill. But watch now what happens when you trace Schiff's logic. Step 1, sell preferred stock promising 11.5%. Step 2, buy Bitcoin. Step 3, when the dividend comes due, raise more money to pay yesterday's investors. Repeat forever, and pray Bitcoin keeps on climbing. Now, Schiff calls this the most obvious Ponzi scheme in existence. And here's where it gets just crazy. When the STRC launched, the yield was 9%, but today it's 11.5%. And in Schiff's words, that rising rate is the thermostat of desperation. The yield has to climb because new buyers are getting harder to find. Now zoom out for a second because Strategy isn't operating in a vacuum. Nakamoto already collapsed doing this. 21 Capital and Metaplanet are running the same play, and Strategy controls 3.9% of every Bitcoin that will ever exist. So if they're forced to sell, they drag the entire crypto market down with them all at once. Now, quick break. If you want to trade these moves and not just understand them, 1K a day is my futures course. There's 105 lessons, lifetime access. You get 90% off with the code K-shaped at 1kaday.diy. Go learn more. The link is pinned down in the comment below. Now back to the buried truth though, because on May 5th, 2026, Michael Saylor sat on the Q1 earnings call and said the words Schiff had been waiting 5 years to hear. He said, quote, "We'll probably sell some Bitcoin to fund a dividend just to inoculate the market." Listen to that word, inoculate. Yeah, that's the word they actually used. Now, CEO Fong Li called it math over ideology. But the real translation, the never sell promise was always conditional. Polymarket odds of Strategy selling Bitcoin before December 31st jumped from 10 to 48% overnight. On Myriad, the odds are 82%. BitMEX research now puts a 70% probability that Strategy's net asset value falls below 1.0 in the second half of this year. That's not Schiff yelling on Twitter. That's the market itself pricing in his thesis. And Q1 came in at $12.54 billion net losses, with Bitcoin down 11% year to date, while gold is up 9%. Now zoom out, because this is the K-shape playing out inside the crypto game. See, at the top of the K, you have institutional shareholders, sovereign wealth funds, the executives who collected fees raising $11.7 billion in capital this year. But at the bottom of the K, you have the retiree who bought STRC because someone marketed it as a low-risk 11.5% yield. The retail investor who paid $454 for $100 worth of Bitcoin through MSTR. The person who didn't read the 8K filing where Saylor reserved the right to suspend the dividend entirely. So this isn't a Bitcoin story, it's a household savings story dressed up as a treasury story. Now, if you want a deeper read on how these types of financial setups work, how it bleeds into the United States economy as whole, go ahead and click on the main link down below in the pinned comment. Get to my main channel. We do long-form videos like this all the time. Now, there's a video next to my head about another corporation that lied to you and didn't tell you the whole story. YouTube picked it for you, and I know you're going to love it. So click that video, and we'll catch you in the next one.